In this tutorial, we are going to go over how to add new client level earnings and client level deductions. In order to have a new deduction or earning for your employees, you must add it at the client level. So we are going to go through those steps right now. From the search menu, you're going to simply type in earnings. And you will see two choices, employee management and client management. We want to go to the client management as we are setting up a new earning for your company. From this screen, you will simply click the Add New. In the earning type, this is very important. We have various earnings already set up for you. Please disregard the ARPA or the COVID sick codes. You need to contact one of the PRS staff in order to add those to your account. However, if I wanted to add a miscellaneous earning, let's say I wanted to give them a miscellaneous taxable earning, this means that anything I pay them will get taxed. I simply click on that earning type. From the title, I can go ahead and just type in a new earning. Let's say it's a cell phone reimbursement. From the description, I can put in that as well. So we'll just type cell phone. And then inside here, these options over here will dictate how the earning works. If you select Allow Employee Override under the schedule, this will allow you to decide when that employee is going to get paid that specific earning. Earnings are very different than salaries or hourly rates. I could go ahead and set up a default of every pay. I could do it the first pay of the last pay of the month, the first pay of the quarter, or however I want to choose it. From here, I'm simply going to hit save. We have to, if this pops up, you're going to simply rename the code. The codes must be separate from everything else. There cannot be the same type of code. And as you can see, we already have a code of 40 under training. So we're simply going to go ahead and put this in as a 99 code. I also like to do this with the sequence numbers. However, we're not going to talk about that for this tutorial. Once you save that, the new earning has been added to your environment. So now we can go ahead and add that earning to an employee. If you have questions on how to add earnings to an employee, please watch the tutorial about how to add employee earnings and deductions. Now, let's move on to client level deductions. From the search menu, I'm going to type in deduction and choose client management payroll deductions. The same concept applies here. You will see a list of all the deductions that are already set up for your company, and I can simply click the Add New Deduction. Now, it is very important that you understand the deduction type that you are going to be using. Is it a pre-tax deduction? Is it a retirement type deduction? Or is it simply a standard deduction like a uniform? In the deduction type dropdown, we have various different types of deductions preset for you. So if you were setting up a retirement deduction such as a 401k, you could go ahead and select 401k and the system will automatically know what's going on here. I'm going to go ahead and show you a couple of the deductions so you know which ones to use. So if I scroll down in here, you can see the most common ones are going to be your medical insurance. So we have medical after tax and medical pre-tax. After tax would take the deduction out after taxes have been withheld. The pre-tax would take the deduction prior to taxes coming out, which would ultimately lower the taxes for the employee. You do need to have a Section 125 plan in place to use pre-tax deductions for medical. If you're not sure, you can go ahead and contact your broker and they would be able to support you in that question. Let's go ahead and set up just a miscellaneous deduction. So what we like to do for miscellaneous deductions is to use what's called voluntary deduction. A voluntary deduction is just a standard deduction that is coming out. We are going to go ahead and rename this fines. I'm going to go ahead and give it a code. If you're not sure which codes have been used already, we suggest that you just start using in the 900 series. The only other thing you need to do here is to uncheck this adds to standard amount. What this does is if you key anything inside your payroll entry screen, it would add to the amount that's already set up under the employee. We don't recommend this. We recommend that if you put in an entry into the payroll screen, that will be the override rate for that specific payroll. So we typically recommend you not check this. If this is checked, again, it will add to the default amount that's already set up under the employee screen. We also recommend that you check this allow employee override, so that way you can set the frequency of that deduction on a per employee basis if you like. The default will always be every pay here, however, you can override that for each employee. If you were setting up a loan and there would be a balance, we would simply select has declining balance. That will allow you to actually have a balance in the system. So every time a part of that deduction is taken, you will be able to go ahead and see the new balance. Once it's zero, the deduction would stop. From here, we're simply going to hit save. The new deduction has been added and you're all ready to process payroll or make your changes to your employees.